All right. Good morning, everybody. Read around the world, not much on the table today. On the week, we do have Powell talking at some point. Looks like the 25th, so Wednesday. And then we've got a couple of high impact opportunities later in the week. But for Monday itself, not too much on the table. Looking at what's going on around the world, China's down the most, with small caps US right behind it. UK, then Japan, then the NASDAQ, the Dow, the S&P, and into Europe. It's all over the place this morning. So we can see this is the website that I use for major economic events. Usually only the biggest things stand out here. They don't try to do what other websites do, where trying to list every single thing. They only list the highlights, and they've got nothing on today. So it just kind of reiterates that point that it's not a big economic events day. We do have 3-month and 6-month auctions today, so it's the front end of the curve. Those are going to be at 11:30. And then tonight, we're going to get manufacturing data out of Japan. So this is Seeking Alpha's weekend podcast, that Wall Street Breakfast the week ahead. They've got some pretty good podcasts. This is one of them. Another one is there's this one they talk about what moved markets. It's kind of a look back on the day. So I bring it up because if you have one of those days where the market just really made some big moves and you haven't figured out why those moves happened, right? It wasn't connected to any news that you found. There wasn't any economic event that day, and you're still trying to figure out what the heck happened. Check out Seeking Alpha's podcasts. That what moved markets is usually pretty good. Can point you in the right direction to maybe find what happened. I can say sometimes you don't find it, right? The market's just made some crazy move and we never do get a why behind it. But earnings on the week, it is the big event for earnings, right? With Microsoft and Google and Meta and Amazon, it's that week. So really big deal. These names individually have enough market weight to move, broader markets. Collectively, they can take this market up or down. So one of the biggest things this week is how these companies are using AI and or how they're going to use AI. So they better have something good to say, or this market's just going to drop kick them. And that's going to be a wild ride to the downside. As my 2 cents anyways, I don't know, how much weight we can put into that. I'm certainly not an earnings analyst. I dabble in the water a little bit. So Qualcomm's got an event tomorrow. Abercrombie and Fitch. So retail stuff. So this event here, this women's wear, daily apparel, and retail summit. So Macy's is going to be there, on and on, right? There's also a technology summit. Robinhood is having an event on the 24th and 25th. Now, for anybody who likes to play those short squeezes, Groupon and AI are 2 companies that had been really great opportunities early in the year. Well, their short interest levels are elevated again. So ticker symbol AI and then Groupon are worth taking a look at because they're on that volatility watch. Here's the spot gamma levels for today. I had it sitting there while I was setting up the YouTube. So Should have already had a chance to catch your screenshot, but if not, there you go. All right, we are inside week breakout. I have to say, I would rather gap down on the week than gap up on the week. So the fact that we gapped up didn't really inspire me all that much, and the fact that we've sold it off is it's fine with me. One thing we can say is that the gap is closed. Hey, and that last week's low, which was also last week's close, is now the pivot point that we have to get through. Shouldn't be much of a surprise there. Take all of last week, measure it, mark out that 50% mark, and you'll notice that it's the cog line 43.33. So not only is the 50% level a line in the sand that we got to get through, and technically we would consider it a resistance level, it's also now also a cog line, and that makes it even more dramatic. I'm gonna put that word in there. I don't have a better one. It's a level of concern. Getting through 43.33 is going to be a hard fight. We are underneath 150 period moving average on the weekly. That's a big deal, but we're not underneath the second one. So depending on, if you're an SMA or an EMA trader, I don't distinguish between these two because as far as I'm concerned, it doesn't matter. But if it matters to you, then whichever one that you use, you'll know which one of these is yours. It's a long drop down to the 200 period moving average, which also happens to be that March low. So you're looking at 3,900 if we break 4,200. It's not a straight shot, but there's not much down there to help us out. So far, technically speaking, we are in a beautiful downtrend. We needed to break that low, and we broke it. So as long as we keep it, then this trend is in play. There is no uptrend established until we can get all the way past this high up here, that 42.30. Now, that doesn't mean that we have to wait that long before we try to take long trades. Some of the best entries are when we don't have a signal yet, right? Going in without confirmation because, well, you pay for confirmation. So LREs would get us in along these lows, but there's no signal or guarantee or promise of a trade down here. Trying to go long at these lows would be only because it's the least amount of risk. So for any sort of established turning signal, we at least have to get back through that 44.23, which is going to be a heck of a deal because we've still got to get through 43.33. Now, this is based on candle close. The week just started, so that break below the white line there, 42.35, technically doesn't count yet. We're really close to it, and the week hasn't closed. If we expand far enough beyond it, where we call it a point of no return, you get too far away from it, we don't have to worry about candle close at that point because we would be too far away to return by the end of the week. We're not there yet. The volumes are a little heavy this morning. They're not overly heavy, but they're a little concerning for a couple of reasons. They're not hedging this morning, which we would expect if there was, like an economic event on the deck. And we already talked about there's nothing really big on the table today. So they're not hedging, but they're certainly in here trading. And the trading's a little heavy. This generally would be sitting somewhere between 76 and like a 120, maybe 130. So coming in the 170s, that's a little heavy. And we can see the tag up here, it's elevated volumes. So it's not extreme, but it is getting in the higher end. And we want to dig deeper into that volume. especially if we can find bringing up, say, like a volume profile and TPO combined, if there was an elevated pool down here, did we land into an iceberg or something like that? It wouldn't be a ceiling, right? Because we haven't ripped up into anything, but we could have hit an iceberg. We are getting near that cog line too, the 42.11, where we hit the put wall this morning and cut through that as well. You would have expected, I would have expected, that the put wall was moved. So let me check that number real quick and make sure that that it is an updated number. It should be. Yes, put wall 42.25. 42.25. All right. It is what it is. So we cut through the put wall and it did its job. I mean, it's not supposed to be, you know, like this perfect dot that we stop on and turn around and run the other direction. But yeah, we can see the response after getting into the put wall. A lot of analysts has been looking for that capitulatory low, right? The place where traders just throw up their hands and really start to sell so that the market can buy it and we rip to the upside. We might be seeing that low, right? Blow off tops and capitulation lows. TINA, TINA, there is no alternative. 10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs. This isn't the profile that we would want to use to identify if we hit an iceberg this morning. We can see, looking to the upside at this Globex session last night, we do have a lot of volume up there. So it's going to be a little bit of a struggle to get through that. But that 50% line in the sand is the area that I'm really focused on. It's not exactly smooth sailing back to that level, but there's nothing significant here that would cause us too much of a concern. All right, so Friday, we hit this old VPOC line from back in the day, and it's not a surprise that we pretty much cut through it like it wasn't there. I'm of the opinion that at some point, these things lose their power, right? Especially if they were attached to a contract that we're no longer in. I think that was the September series contract when we built that VPOC, and we're in the December series contracts, right? So kind of hard to see that there's any unfinished business there when we're literally in an entirely different contract. Same thing with this next level down, the one that we're interacting with this morning. I'm going to leave it on here for the day, but we cut through it like it wasn't even there. And sure, maybe there could be an argument that we negotiated with it on the other side. I wouldn't make that argument, by the way, but you know, could be made. I mentioned TPO and volume profile combined to see if we had found some elevated volume. And yeah, I would say, you know, we hit a large chunk of volume right around that 42.30 cog line. We can see that we didn't spend a significant amount of time there, but we did get a significant amount of volume there. These other levels where we did get higher levels of volume, we did spend more time there. So it makes sense, you know, you hang out in one spot long enough, you're going to build up some volume. But that cog line at 42.30 seems to be a level where we triggered into some really good volume, but we hadn't really spent a lot of time in that area. And you can see on this pre-market volume profile with TPO that the area we spent around that 42, 45 area, this whole zone here, a lot of volume and a lot of time spent there between 3 and 5-ish, you know, little 2-hour window. We built it up more though on the higher end of that. So if we just ran our line across, let's try to find some of that higher end of volume. I would say there was a lot of work being done right in that zone, either to defend or just kind of that capitulation talk again. And either way, it's going to be a difficult thing to get through that 42.60 as much as it's going to be just to get through the 42.30 area. Friday did offer us a VPOC, by the way, so we're going to carry that forward as well. So if we do get a Globex breakout to the upside, keep 42.65 in mind is the point of control from yesterday. All right, last week when we were looking at the weekly expected move, we noticed that this week's profile was a little bit bigger than last week's profile. Get all this stuff out of the way. But we were measuring it before it had actually set in stone, because it sets in stone at 415. So this is what we had last week, roughly speaking. This is what we have this week. And you can see the gap down here, how much bigger the week is that we're in now versus the week that we just got out of. These lines are based on volatility. So when volatility goes up or volatility is increasing, then the distance between the green and the red lines gets wider, and then it locks into place Friday afternoon. So we came into this week already with a sense of higher volatility, more volatility. We want to look for that to play out. Volatility is movement, right? It's just a nerd word for movement. So if we've got elevated volatility, then we've got bigger moves on a day-to-day basis, the candle close to candle close. And since we're on a daily, those are implying that the daily range is getting bigger, that how far we get from one day to the next is longer. That implies and is shown through the ADR. Right now, our 21-day average daily range is 1.5%. Now, with that in mind, from where we opened up in the Globex last night, we could move 0.75 to the upside and 0.75 to the downside, and the whole range would be considered 1.5, right? That'd be the distance from red line to red line. But we could also just open and move 1.5% in one single direction. And that would get us to the yellow lines. So that's where that ADR half and that ADR full come from. It's nothing more than looking at what we've done on a day-to-day basis and putting that on the table for today on the expectations that markets generally do what they have been doing, right? A million examples where they get out of line and they do something different. But for the most part, things tend to do what they normally do. That's why averages are so valuable. So 4191, call it 4192, is the low end of the ADR today. If we do continue our drive to the downside, when we get there, it's very likely going to be done for the day. It'd be odd for us to get past that and into another level. So we're looking at the SPX for an example here. Yellow line, we were done. We got to the yellow line, and that's as far as we went on that day. Yellow line, we were done. Yellow line here, again, we were done. Overshoot through the yellow line, but we were still done. Same thing here, yellow line, and we were done. Kind of get the idea, right? Sure, we can go through and keep going. We did it here. It was one of those massive rip your face off days. But for the most part, if we're having a good day or a bad day and we're really rocking it out in one direction, we get to the yellow line. Maybe we digest a little bit more, but that's it, right? We really don't get past it and continue to drive past it very often. So it can happen, but most of the time it doesn't. You want to line that up also with what time we get there, right? Same thing with red line touches. When we do get to the red line by, say, 10:30 or 11, that leaves room on the day for us to flip over and go all the way to the other red line. So those ADR levels hold a lot of weight. They got a lot of value to them, right? Because no sneaky stuff behind it. It's just math, right? It's just what we've been doing every day. ADR, average daily range. All right, Bitcoin is up this morning, which means very likely its proxies are also up this morning. We're getting near this half back level from the quarterly chart. It's 32,520. But to get there, we've got to get through all of this trash back here. Right. And I say that, but there was a lot of trash here. I've already cleaned it up, took it off because we cut through it. And there was some trash back here that we were able to get through eventually. After it struggled for a while, we made it through it. So we're in that drive, we're in that trash. We got to get through there. It'd be really surprising if we make it in the first shot. It's very likely we're going to have to go through there a couple times, just like we did back here and like we did here, where it's just a fight, but it eventually grinds its way through it. So if we can get through, call it 32, then we've still got to deal with the 32,520, that quarter half back. And after that, we're pretty good to 38. That sounds pretty good, right? Bitcoin back to 38. Hoorah. Now, this is being tied directly with volatility. The idea was that if Bitcoin was to sell off, we'd really start to see volatility kick in. Well, I mean, it's not selling off. Yeah. 8:30, 10, and 11:30. That's the econ. Bitcoin up 3.5%. And that's it. That's all we got up there, right? That and Bitcoin, VIX. And then on the downside, bonds, nat gas, energy, more energy, uranium, which again, more energy, emerging markets, financials, cloud computing, China ADRs, semiconductors. Basically everything. That's not much of a surprise, right? Thanks, Captain Obvious. %41 of the S&P 100 is down 0.5% this morning. 4% of the S&P is down 1% this morning, and that includes Apple. Although I don't take that on faith. .17%. Me and TradingView have trust issues. Chevron, Apple, Bank of New York Mellon, and Salesforce are the four names in the S&P down 1%. But that's nothing, right? That's like a speed bump, nothing. It's 33% of the S&P now down 0.5%. And for the NASDAQ, 38% of the NASDAQ is down 0.5%. Semiconductors obviously really standing out as what's getting hit this morning. We do got some pot stocks up a little bit. They're not quite where they need to be for our benchmark of 0.5%, but they're really close. They're at 0.45%. And that's kind of the theme that we've been seeing, right? That has been Bitcoin and pot stocks. And then maybe a little China ADRs in there, but that's not getting it, right? So not overly excited about this. And if we open this up into the cryptos, SOS, I mean, that thing has just been, a beaten down dog. It's up a little bit this morning, 4.5%. Looks like it's giving a lot of it back. Mara trying to close this gap from this morning. Consistent, persistent move to the downside. Looks like it's trying to base here a little bit since, around the 1st of October. It's been setting these higher lows. But we're not getting the follow through up here yet. So maybe the classic Wyckoff, right? With the distribution and basing before accumulation. If so, you're looking at 3 to 6 months for that kind of round out the other side. CAN. This thing doesn't have any volume this morning. We're just looking at little algo prints, but it is up 4% from those algo prints. The reason I bring all this up is, there's always something moving to the upside. So while everything is looking pretty negative out there this morning, there's always something going to the upside. Right now, it would be these crypto names, maybe a little bit of some pot stock stuff. And on the week, if they were going to rip it back, if they were going to change the narrative and get the market off of this global crisis with the war and everything else, it would be this week, right? It would be this with the FANG names coming in this week. Otherwise, this is like the last hurrah before they dump it. It's kind of a go, no go line in the sand. It's getting to be like that. And it's already worse than it should have been. Turning it into a line often helps, right? When you're trying to figure out how to do what they show in the books with the higher highs and the higher lows and topping patterns, pure price method. That was a lower high or a lower low. And then we got that lower high. So it's not even what they call a complex topping pattern. It's just your regular topping pattern. With that break and with that failure to break above, it offered this opportunity as your first short. Then this pullback here offered another opportunity to short there with a break of that. And all of this just confirms a straight on trend to the downside, because you've got 2 lower lows and 2 lower highs. That's a full set. That's a full trend to the downside. But trends can turn, right? And we're talking about the indexes. So, it gets to the point when we start asking, well, are they going to come in and play save-a-ho and flip this market over? Are they going to come in and defend anything? Is there anything that can turn this market back around? And, we had the 10-year this morning firmly above 5%. Now we've pulled back from that, but we haven't fallen, and the 10-year looks crazy bullish. So as long as that 10-year, and you can just use the TNX, you don't need to use the futures markets. Look at that breakout this morning. Well, I mean, this weekly chart looks seriously bullish. And until this changes, it's hard to see a market, that's going to rally back out to S&P into the year highs, right? It can't with this. So something's got to give. Then same thing with the dollar index, the Dixie. If you look at how many weeks in a row we were running green, 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 green. Now we're IX10. So we got to get this to stop advancing, which, last week was a good start, a week before. We're all holding underneath this 1st of October candle, that red candle. But it actually needs to pull back a little bit. Otherwise, this is still bullish and it hasn't given up anything. It's just pausing to digest after that big move. With the Dixie sitting that high and the 10-year being as strong as it is, we're not going to flip this market over and go the other direction. And then US dollar Japan, if there's going to be something that can turn this market around. This new keyboard is driving me nuts. I'm going cuckoo. You can see the intervention from last year, October, and now we're right back to that level. So one of the discussions has been, well, we're going to rally up out of the lows in the S&P and in the broader market when Bank of Japan defends. Okay, maybe, but they don't owe us that defense, right? They don't have to do anything. And they are going to get some data tonight. We'll see how that affects their 10-year. We'll look at US dollar Japan. This is like one of the few places where I've still got my eye that says there could be an intervention, or even, before COVID and before the 2022 bear market with high inflation and everything. If the market was looking this nastier this week, they'd be cutting rates and, trying to boost things, but they can't do that, right? They cannot do that. But that doesn't mean that they can't still intervene and play around like they did back in March when they bailed the banks out, right? Little wink, wink, nod. And even just discussing policy changes can be that subtle stimulus. But I think it'll be Japan, right? If we're going to get some sort of saving grace, or it's going to be the FANGs this week. The Googles and Microsoft and all of that, showing the presence of AI in such a way that makes everybody smile and changes the narrative, and we rip this sucker back up. Otherwise, We are in a full trend to the downside, confirmed by the break this morning. I said confirmed, but I should not have used that word. Until we are candle closed below that line, it's not confirmed. Right. Take it back to the ES where we've actually got a live weekly candle. This candle isn't closed and we're not past the point of no return. So technically, there's still a chance, but I'd say it's a full trend. Cool. And there's nothing really looking good out there dominant wise other than the Bitcoin proxies and a little bit of pot stocks. So I would look for a broader market change to find some opportunities, or individual, what they call event trades, right? You find one or two names that have something going on for them that morning and you trade those, avoiding the whole broader market movement, no matter where it's going. And I will see you all tomorrow.